Black Diamond Mortgage is going to be doing a menu of courses for through April and just trying to provide a lot of good content that you can watch on your own time or live and schedule it. I'm the kind of person I do better if I schedule it, show up live, but if you need to watch it played back to you, it'll be available to you. A little bit about myself, real quick. I am David Boy, and I own Black Diamond Mortgage, and I've been a mortgage broker for 17 years. And this is about today's education materials about the VA. Just a little bit of background. I've been doing the VA loan since 2009, and I've learned a lot. I did my very first VA loan was how I learned a lot about VA. I was fortunate to have a veteran just attempt to get one of these loans and ask me if I could do it. And so I went through the process with him and able to get it to close. And he didn't know that it was my first one. And what I saw was a guy who had recently gotten a divorce, and he needed to buy a house. And one of the features for him that was important was the no money down, because he had just given up pretty much all of his assets through the divorce, including his house and everything. And so he needed to get another house. And because he was a veteran, he was able to settle up on his divorce and go buy another house without having any money down, because he had just paid his ex. So his first use of the benefit was kind of a bailout for him of some life circumstances that changed, and seeing him reestablish his life and benefit from that VA loan got me thinking about it and how beneficial the loan is. So since then, I've been doing it. And when I did that loan, I had to register with the VA. So I've had the Black Diamond Mortgage Corporation has had a unique VA number since 2009. And so the loan program is basically, I believe it to be one of the better mortgage loan programs. And the most important thing I want to convey before we get into details today is that this is a benefit that veterans have earned. And the first thing you need to ask yourself if you're going to play in the arena of VA is, are you going to honor the veteran? If you aren't, you seriously might want to consider making a handoff. If you do, you're foregoing income. So if you're a real estate professional, you're a realtor or a loan officer, and you are not going to honor the veteran, then maybe you should make a handoff to somebody who will, because there's a lot of important things. And then shame on you for thinking that way, because what you ought to do is say, I'm going to figure out how to do this so that I can honor the veteran. And that's what I want you to get out of this, is how to do that, and to understand that there's a huge bucket of business that is the veteran community that has earned this benefit and wants to use it. And just to give you some easy numbers, I don't know that these are 100% accurate, but I've heard these bantered around. But I've heard that the state of Montana has a really large percentage of veterans living in it. I've heard numbers as high as like 10% of the population. So if you just think about that number right there, if it's 1 in 10, if you're going to actively do good VA business, that's how much of the population you have access to do business with. And if you're not, that's how much of the population you're going to exclude from the available people that you can do business with. So right out of the gate, there's a large, and the reason is, I've heard that if you didn't do your service in Montana, this is the state that you'd like to come live in when you're done with everything. And so that's why we have a high percentage in Montana. It's not that everybody in Montana is serving in the military. It's that there's a lot of people living in Montana that have served in the military. We do have some military bases and there's people serving. But when you look at that number I just threw out, that has more to do with people that after they're done with work or their service, they've decided that they want to settle down in Montana. It's a great place to live. And it makes sense. It's a high quality of life. There's, the mountains and all the recreational opportunities, and good place to raise a family. There's a lot of benefits living in Montana compared to other places. So getting down to honoring the veteran, I'd say the number one thing is to understand that there's a right way to do the VA loan. So I was, for 1 year, I quote served. I don't like to use that word with actual veterans because I wasn't in the military, but there's a group that you can participate in. It's called the Vetted VA. But one of the requirements of it is that you take a test. You have to score 90% on it, and you have to basically study the VA manual. And then it's really painful. But the benefit I got out of it was I passed the test, and for 1 year I served on basically they have a live Facebook group where a veteran can come on at any time and ask a question, or a real estate professional can go on and ask a question. And the members of Vetted VA are required to give the right answer. And the reason I mention it is when we were required to give the right answer, one of the things that we were supposed to do was cite the part of the manual that we got the answer from. And I want you to understand that because there's a right way to do everything you can think of with a VA mortgage. And if you approach it that way, what you'll have is a better experience. Typically what I see going on is people have an automatic knee-jerk assumption about the VA loan, and it's often wrong. And so it just sets the table for everything to go less desirable. So if you kind of approach the VA, as soon as you hear something, you're like, I wonder, go ahead and find out. Now, if you're a realtor, you do not have to go get the VA manual, but you do need to be working with somebody who looks in the VA manual. So if you're working with a lender, have them point it out to you. So let me give you a couple misconceptions that are common to the VA loan. One is that the VA loan is denied at a higher rate than other loans. That's an absolutely false statement. Some people think that because they hear about a bad VA loan experience. So right out of the gate, you just have to understand that there's a protocol for doing the VA loan. And if when I was explaining my first VA loan, I didn't know what I was doing, I lucked out. I got through the process with no problems. But had I had a problem, my knee-jerk reaction would have been to blame the VA loan, because I'd be like, this is a harder loan than what I'm used to, which is the wrong way to approach it. So the real truth of the matter is the VA has the most forgiving credit standard of all the loan programs. Their goal in writing the rules for the VA is to help the veteran get a home. And so when they look at every loan guideline, there's more grace in the VA than any of the other programs. At Black Diamond, we do VA, FHA, conventional, jumbo, not all these different loan products. With the VA, they're truly looking to see is, even if they've made mistakes in the past, are they in a position to make it happen? And so to understand, one benefit to VA is a borrower that's eligible has got a higher percentage chance of getting to the finish line as far as their profile is concerned with the VA loan. It's probably the highest percent chance. Another misconception about the VA loan is that it is more expensive than other loans. This typically comes from the misunderstanding about the VA funding fee. There's a funding fee assessed on the settlement costs of a VA loan. It's financed. So if you're a veteran and you see the VA funding fee on your settlement statement, it's added to the loan. So if they vary these percentages over the years, but if the VA funding fee percentage is 2%, what that's doing is it's making so that the veteran doesn't have to pay monthly mortgage insurance. And then it's added to the loan principal balance. So all the other loan products, for the most part, that a borrower enters into that has low down or no down, they've got monthly mortgage insurance carrying along with the loan, and the VA does not. So once the VA funding fee is rolled into the principal, that's it. There's no monthly insurance premium to carry the risk of 100% financing. So if you do the cost over a 30-year presentation and line loans up side by side, what you're going to see is the VA on a 30-year is a better deal for the borrower. Common misunderstanding, though. And then another one is that no down payment, that the veterans don't have to make a down payment. The misunderstanding is that no down payment equals a weaker borrower. This is simply not true. And I can give you an example, but I've had some veterans who've served our country who decided they were going to use their VA loan on $1 million home purchase, finance the whole thing. When the rates were really low, like in the twos, the rationale behind it was not that he was a weaker borrower, or that she was a weaker borrower. The rationale was, I can get money at 2% and find other things to do with my money. And there's no difference in the VA loan, whether it's 100% or 50% of the purchase price financing. So if your veteran is seeking 100% financing, they're not a weaker borrower. They're just a privileged borrower that has a better loan product to draw off of. There's a misconception that, you know, the VA appraisal is slow and could come in at a lower value. It's untrue. So the actual data shows we've actually, I will supply to you for attending this course an email with a flyer that has this data in it. But I have a 2020 survey that you can see that shows all the different loan products and where the appraisal hit in comparison to the purchase price. And the VA actually hit the target higher than conventional and the other products like FHA and stuff. So it's just a misunderstanding. And I'm going to go over in a second a cool feature of the VA loan when you do get a low appraisal. But statistically, it's not true. And they're also the appraisers for VA must, in order to be a VA appraiser, they must complete in a timely fashion the appraisal. And they're under very specific regulations with the VA. There was a problem about 10 years ago where there weren't enough VA appraisers and they were taking the full 30 days. But in Montana, that problem has been alleviated. And in Flathead County, where Black Diamond Mortgage is situated, we have like 10 VA appraisers right now. So the typical turn time on a VA appraisal is about a week. And basically, the one thing you want to be concerned about is ordering it too fast, because they are under specific service requirements to the veteran to get that appraisal done. And if you order it, you need to want it. So on our other products, we can hit the order and then hit the pause button. With VA, you need to want to get the deal done when you order the appraisal. So it's a misconception. There's a misconception that sellers have to pay all the closing costs with the VA. It's not true. There is a provision in the VA with the closing fee that the title company assesses that cannot be passed on to the veteran. But there's tons of workarounds, and most your title companies are happy to work with veterans, and there's ways to structure the buy-sell contract so that that doesn't become an issue. But the closing fee is not the closing cost. So sometimes people hear that kind of thing and they make an incorrect assumption about the VA loan. I'm going to hop into a few benefits of the VA loan. So those are misconceptions. And that the purpose of that is to motivate you that things you've heard that make the VA less desirable, probably not true. Black Diamond, we do a high percentage of VA as our total book of business. And it's because every time you do a good job on a VA loan, guess what happens? Other veterans talk to other veterans. They're looking for people who know how to do the VA loan. And so if you know how to do it, you know how to serve a borrowing community that wants you to do business with them. So the benefits of the VA loan, the number one benefit, the most attractive, I think the one that people seek the VA loan the most for is the no down payment feature. So essentially a veteran can get a loan with zero money out of pocket and buy a house. So that right there is an amazing benefit. There's not a loan limit on the VA loan. So you'll hear lenders talk about conforming loan limits. I think currently $750,000 on a lot of products is a loan limit. With VA, there are two buckets of VA loans. And so the lenders offering them do need to have a capacity to do the higher ones. But from a principled stance of the VA itself, they will back loans of any size, just meeting the normal requirements. So veterans that can afford multi-million-dollar houses are very attracted to the VA loan. So it's important, if you're a real estate professional, to not dissuade a veteran who has that kind of capacity from using their VA benefit, because you may be dissuading them from wanting to use you as a real estate professional. They may know a lot about this product and be very excited to use it. And from your perspective, one of the cool things is, I'll just give you a quick example, but imagine you have a borrower buying a $2 million house, they're putting no money down, and they have a couple $100,000 in the bank because they're buying a $2 million house. And now you do get a slightly low appraisal or you need something. Well, guess what? The veteran has the most capacity to fix that problem with that extra money in their pocket than the borrower who's already putting up their 20% and maybe they can't get to 30%. So in a weird way, that 100% financing actually strengthens your VA borrower on a high dollar amount to go after homes that might need a few things. A lot of people don't know this, but in the last, I don't know, at least 10 years, the VA has had lower interest rates than conventional mortgages. So I know over the history of the United States, that has not always been the case, but basically VA loans are backed by Ginnie Mae securities, which come with the implicit backing of the federal government. And they're deemed to be slightly superior to the Fannie Mae and Freddie Mac security. And what that does is it makes it just slightly more attractive in the interest rate environment. So what we've typically seen in pricing loans out is anywhere between 0.5% to a whole percent lower VA rate than what you can get on a conventional rate. And so a huge benefit to the veteran is the interest rate. The lack of PMI is a huge benefit. So when you're trying to raise the loan amount on a borrower who doesn't have a down payment, one of the battles you face is also incorporating PMI. The borrower is struggling to come up with a down payment, and then their monthly payment, which is a composition of principal, interest, tax, and insurance. And then if they're going less than 20% down on some products, it adds PMI. You're trying to put less down, but then you're adding to the monthly payment and you're running into this difficulty. The VA loan does not add PMI, so it's strictly the loan amount. And so it's a huge benefit to the veteran. Underwriting guidelines are huge with the VA. So this is probably one of the biggest benefits of the VA mortgage. If you have a veteran who has, they need something. I'll give you an example is there's a lot of examples, but I'm just going to give you like an easy example. You might have a veteran who got turned down on a couple loan products because they have a judgment against them. Maybe they made a mistake one time and there's a $5,000 judgment against them from a court proceeding and they've never settled it up. And other than that, they look like a pretty good borrower. The VA loan will actually let the veteran roll that into the purchase price with a seller credit, and it's like a payment at closing to pay off a judgment. The reason I point that out is it's something you wouldn't think of, first of all. And second of all, it shows how hard the VA goes to try to help a veteran cure their credit through the loan process. So all the tricks you'll ever hear about credit are the most beneficial to the veteran of all the different products. The one thing they're always wanting to see, and this is any mortgage you do, is that if they have some credit issues from the past, that the problem's been corrected and that it's not likely to continue in the future. So they are looking to see that the person's likely to pay a mortgage on time in the future. But when you review the guidelines, the VA is very forgiving. They also are very workable on property issues. This is a big misunderstanding with the VA. A lot of people think the VA is stringent. What they do is they have an appraiser who goes out and they do run through a checklist and they will identify things. So if you are working with a property and there's peeling paint on the windows, you can expect on a VA that you'll have to fix the peeling paint before closing. What I always recommend to people is if you're doing VA financing, we're going to honor the veteran who served our country. We're going to pitch this transaction to the seller as a good idea because it's 100% financing. They have a lot of capacity and there might be a couple things that have to be addressed if we could see them. And then what I recommend is just get the photos of what's going on out there in front of the lender and just build a plan for it and go ahead and expect to address a few things and then close. But let's say you have a little issue, like example with the VA might be like a private road issue. The VA has ways to reach out to the regional loan center in Denver, which is our local regional loan center, and get exceptions to some of their rules. So they're not just saying no. And that's the part I want you to understand is knowing how to work the manual, you can work around most of the problems. This is one that a lot of people don't know. Condominiums are actually easier to finance with the VA than any other loan program. The VA recently issued a circular to state that anytime a veteran appraisal comes back with a condo that is unsatisfactory, they can submit it to the VA and request a waiver. And what I'm understanding is they're pretty much always granting the waiver as long as the veteran is willing to live in the home and occupy it as their primary residence. So I think that's not like any other loan program. Most loan programs are in the weeds on the condo, and condos can be kind of tough. So in a weird way, if it's a condo and you have a veteran wanting to buy it and live in it, you just had a better situation develop. So those are some of the cool benefits of the VA loan. There are more. One of the things I want to encourage you to do is just approach the VA loan with the desire to serve, and then understand that there are a lot of things to learn, and then basically plan to go through a process that looks a little different than a normal loan, with the opportunity to serve a veteran well. They have some protections in VA that are unique, and so I want to tell you about those. So one of them is called Tidewater. This is unique to the VA, but on most loans that you do, if the appraisal comes back low, you go counter offer with the seller and you try to work it out on the contract side, or you try to compel the lender to order another appraisal and not like the one that they got. Now, I'm not able to see anybody who's watching this on playback or currently attending, but if I were to ask how easy is it to get a lender compelled to go get another appraisal, I think if you're honest with yourself, you'd say it doesn't work out very much. Usually you get stuck with the one you get. It can happen, but rare. Well, the VA has the Tidewater process. And what it is the moment that the veteran appraiser sees that they're going to have to deliver a low appraisal, they're required to email the loan officer and say Tidewater. And if you can picture the ocean, the tide's going out. And so there's not enough water. And so that's what they're basically saying is it's going to come in low. The tide's going out. So what it means is you have 48 hours to show the appraiser how to hit the target. So a real estate professional, this is a huge opportunity, and we've actually done it before. I'll give you an example, but Flathead Lake, high value property, somewhat subjective. So we had a Tidewater, and there were two realtors on the transaction, buyer and seller. And we got the Tidewater notification, and we noticed both realtors and said, I need comps now to support this $2 million purchase on Flathead Lake. Well, the appraiser wasn't using some of the comps that were furnished to us by the realtor partners. We furnished the comps, and guess what? Appraisal on target. So one of the big requirements was that the realtors were there checking their email and listening to their phone and responding quickly, because the one thing is they do not wait. So if you do Tidewater, you must respond quickly. So what would you do as a realtor to prepare for Tidewater is you would have those comps already in your pocket in case you get a Tidewater. So good tactic for a realtor who's done a lot of VA is if you're thinking the value could be questionable, and you've probably got a CMA on this property anyway because you're helping the buyer make a decision to buy it, or if you're the listing agent, you helped come up with the price in the first place. Get your data in order, and if you have a VA offer, you have this cool thing where if the appraisal comes in low and you get a Tidewater, you can respond to Tidewater with better comps, and you can potentially land on the appraisal target by helping the appraiser. And in Montana, particularly, this is common. We're not suburban America. Properties are not all the same. Inevitably, we don't all agree on which comps suit the property. So having support is good for the appraiser. There's a few things that just wanted to kind of wrap up with, and then I wanted to see if anybody had a question. I'll go ahead and address it. But some common misunderstandings or things that go wrong for veterans that are just trying to get home loans. This is basically any loan, but a good tactic is just to go ahead and get that pre-approval process going. One of the things the VA loan has, I think I'll plug this right now, is called the residual income analysis. So the residual income analysis allows the veteran to go way higher on the debt to income ratio. Now, you may have heard that the debt to income ratio on mortgages is 43%. That's the Dodd-Frank standard that a lot of lenders have to adhere to. You'll hear other people say 50% and maybe a little higher than that. That's because FHA and some other programs will go a little bit higher because the government exempted itself when it wrote Dodd-Frank, interestingly enough. So the VA, though, is even more exempted. So the VA has what's called the residual. What they do is their debt to income ratio is potentially can be in the, if it's a high income earner, it can be into 60%. And how does that happen? And why would it be beneficial? Well, the reason it could work for the veteran is they take a look at their life and see if they, let's pretend that we have a wealthy veteran and they make $35,000 a month and they need $10,000 a month to buy a house and they have a few other debts or whatever. They may let that veteran borrow at 60% of their income because the amount left over after 60% is still thousands of dollars because their income is so high. And they look at residual as what's left after you pay all your bills. So a low income earner is not really benefited by a residual analysis and can actually have a lower approval come back. They do look at things that are outside the credit report. So they'll look at things like, daycare costs or, a reasonable amount of, health insurance, things that might not be in the credit report. And they apply that to the residual analysis. But once you clear it, the rest of the money is considered residual income. And so the VA will do this residual analysis. So it gets at two things. One, getting pre-approved up front is important. A low income veteran may come in at slightly lower than what we expect due to the residual analysis, which is something that gets done in underwriting. So somebody just doing a hasty look at the borrower might miss that. And then also there might be more buying opportunity for a wealthy borrower. But just looking over the data, they've said that veterans that do have tough experiences, one of the number one reasons is not doing an adequate pre-approval process. Also, veterans are more and more able to get a certification of a percentage of disability, and that provides benefits to the veteran. That funding fee I mentioned is waived on veterans that have a service-connected disability. And so that just makes this 100% financing even better. And there's even processes for veterans who haven't yet gone and done that to do it in anticipation of buying a home to get a better loan. So one of the things we would do at Black Diamond, encourage anybody to do, is a veteran who's early in the process to find out what is their current situation. Are they waived on the service-related disability or not? Is their certificate of eligibility in order? There are requirements for veterans to get the VA loan. It's not anybody who's ever enlisted in the military automatically gets a VA loan. And so there's a website that we go on as lenders, and we basically validate their eligibility. And if it's not coming back valid, we can then submit actual paperwork to the VA and get that VA certificate of eligibility, which will then show us if they get the waiver on the funding fee as well. I think the most thing I'm going to include with, because it's about 30 minutes in and I want to see if there's any questions, is the VA loan has a manual that is like 20 something chapters. The way to approach the VA is to do an upfront analysis, anticipate a few things, some of the things we already talked about, honor the veteran by doing a good job for the veteran. And a good job means figuring out what the situation is and then validating their ability to perform. And then when something comes up, validating the correct way to solve the problem. Many VA loans we have actually inherited from other lenders and closed because they didn't know how to properly go through the manual and get to the right answer. So if you're ever working on a VA loan and it's close and it's coming down to one little thing, do not give up on the veteran. If you started out with a lender that didn't know how to do the VA loan, get another opinion Don't give up on the veteran. Help the veteran. With that, I'm going to email out a whole bunch of content and would take any follow-up questions, myself, Maria, or Zach. Is there any questions, anything I could chat about? I have all the time in the world for anybody who has a question. You might have to unmute yourself though, if you have one. So if not, this will be available on record, and we appreciate you tuning in. And in 2 weeks, we are doing an AI class for people who have not yet dabbled in AI, just showing you what we're doing at Black Diamond to use AI and how you can use it to grow your business. It's an excellent tool if you use it. So have a great day.